All right. Good morning. It's Cowboy. It is 8:31 AM EST. We just had core PCE come out, and it looks as if this is going to be dollar week news, meaning that whatever the data was that came out on the core PCE is going to indicate that the economy is not doing well. Let's assume that inflation is down. Okay, so core PCE is a metric that it's data that comes out from officialdom. And this data right now, I'm assuming, is telling us that inflation is down compared to what was expected. Okay, so we are going to take a look at that first. We're going to take a look at how that affects the charts. All right, so let me go ahead and share the screen here so we can see what's going on. Okay. And here we are. So Friday the 26th, core PCE. You know what? It appears that it just came out as expected at 0.3%. That's month over month. Okay. So let's take a look at what this metric is. Change in the price of goods and services purchased by consumers, excluding food and energy. So no change in inflation from last month. So basically what that is saying is we have to look at the prior month here and see what that was. Actual forecast. It was a little higher the prior month, right? So they expected a 0.3% change. The previous month. So it looks like they're hoping for a move. I guess they're, Here's what I'm going to chalk this up to, because if you look at the chart, you can see that this is the pound versus the dollar. The same thing is going to be for the euro versus the dollar. Let me zoom this in and make this easy to read for everybody. Apologies for not being prepared. I started the video and then like my mic didn't work. So I have a kind of a glitch in my system, and I figured it out. Thank goodness. I figured out that I just have to unplug and plug the my soundboard back in, and that fixes it, which is kind of annoying. But at least I figured it out, right? I mean, I could be not knowing what's going on and have just started the show, and it would have been silent, and it wouldn't look good. Okay, so let's move to the 1 minute chart just so we can map what happened as this data came out. And I think what's happened is that money on the sidelines came back in. That's how I'm chalking that up. Money on the sidelines just came back in because we are now 4 minutes after the announcement. It popped up nice and hard, which meant that, technically it means euro strong, dollar weak, which indicates, okay, perhaps, cuts are coming. But it's just, I think it's money going back back into the market. They were holding off to see what the numbers were, and now money is in. And it is, at least on the short term, going in the direction. It was going to head up. That the general super short term look was bullish, and the money just continued in that direction and continues to do so. It was kind of a nothing burger announcement is what ended up there, right? The amount of inflation was the amount that was expected. So money back in. So not what I'm going to say there. And that's on the super short term. As far as the high time frame, it's also a bit bullish. Let me move this. This is my trade station. It's going to have a bunch of data on there that we don't need. And I'm looking at the euro because the euro is it's basically like an inverse of the dollar index, right? So it's a super convenient way to look at things. I'm going to switch over to Bitcoin just to see whether or not Bitcoin was affected. And it was. Bitcoin did pop up on the 1 minute very briefly and is back down to where it was before. So, okay, good. Long story short is a lot of traders probably got knocked out of their trades. This was a definite liquidity grab, and that's to be expected on these announcements. This is why I'm reticent to trade news. I do have a method where I can trade it kind of safely in a way and just gamble it. Where basically if I can start a trade before the news starts, and then if I'm ahead on the trade, then I can put a stop right by entry, just a little above entry in case there's liquidity problems. And then that way, if it goes in my direction, great. If not, I'm stopped out. I didn't do that today, mostly because I actually got up late. I have 2 different alarms I set, and one of them didn't get set. And then the one that woke me up is my emergency alarm. So fun stuff. Let's go ahead and jump into the charts. I don't think there's a lot of change in crypto right now. Crypto is super low volatility. Okay. So this is like I keep talking about, it's to be expected after having, if we go back into history and we take a look at the Bitcoin halving, price tends to go sideways and a little bit down once the halving is done. And the halving was, what's today, the 26th. So it was a week ago. We could go today, actually, we could go tomorrow, if I'm not mistaken. So either way, there's just not a lot going on. You're looking at the daily chart right now, and the halving was on the 20th, which is right about here, and price has just kind of gone sideways since then, which is more or less to be expected, and probably will continue so over the next, I'd say, 8 weeks. If the prior halvings are any indication. Now there is the narrative around what do you call it? The narrative around Grayscale still selling off their crypto, and basically pushing the price down. Now there are other people saying, "Oh well, BlackRock and all of the asset managers are buying up the crypto that Grayscale is selling off, so price shouldn't be affected by that." And arguably that's the case. The last I read, though, and this was about a month ago, the last I read, Grayscale was selling faster than BlackRock et al. Can buy. So that would actually be a bit of downward pressure if there was such a thing. But what is also happening is we're in the middle of a bull market. So a lot of people are going to also buy. It's not just BlackRock. You know what I mean? It's not just the asset managers buying. So there's a decent chance that whatever Grayscale is selling is being bought up. And hence we're seeing basically, well, it looks like a giant bull flag, really. We have to be careful with Bitcoin and bull flags because those often can be very deceiving. There's something called a momentum ignition algorithm where they paint what looks like a bull flag in order to trick people into buying or selling, and then that is not what's going on really. It's actually a different thing altogether, and so people get fooled and the price gets pushed. They'll actually use people's fear and greed to push price in a given direction. So we don't want to get too hung up on those kind of formations, especially with crypto. Crypto is better. Just supports resistances, ranges. It's probably the safest way to go. Or if you trade algorithmically, it's a great way to go with crypto. Nice. Cool Cat says, I'm never going to read that, but that's very funny. Oh, man. Did your 3-year-olds, I take it you're potty training and apparently not 100% successfully. Oh, the joys of parenting. Yeah, that's pretty funny. All right, hold on. If you'll excuse me a moment, I got to mute. I got a little, just got to blow my nose, man. That's not something people want to hear, is it? Do y'all want to hear me blow my nose? I didn't think so. Give me a second here. Okay, let's take a look at gold. Jay says gold is going crazy. Let's see what's going on with that. All right, gold. Yeah, so Bitcoin, not much going on, and probably won't be. If Bitcoin stays calm like this, there actually is a good chance that the altcoins might start to go off. I'm going to have to research prior halvings to see, whether or not the altcoins are actually going off. I mean, gold is doing what I said it would do. I guess that's going crazy. I know gold is going up. I don't know that I would use the term going crazy, but it certainly is following what I said it would do. And this what I drew, I believe I drew this in the private live lab. So just so you guys understand, if you zap that QR code on the top right-hand side, you're going to see our website. That's Algo Factory. And we do this show here for beginner traders, right? So if you're a beginner trader, you can come in here on YouTube, ask questions. The YouTube is growing and it will continue to grow. So there will be a lot of, there'll be a lot of people in, and at some point there will be so many questions that we actually have to flip it over to super chats or members only or something along those lines. But for now, it is still free. So if you're a trader, you have questions, you can come into YouTube. I think you can ask questions from X. I don't know that the Rumble questions are showing up in the live stream yet. There's just not enough people on Rumble for me to know for sure. And I'm just haven't tested it because, whatever. But this move here is called. I called this out. I mean, you can see the arrows. I drew this 1, 2, 3, 4, 5 days ago. I drew this. Okay, 4.5 days ago. So just doing what I said I would do. Nice bounce right off of 2,300. So just showing off a little bit. But nothing unexpected. nothing too crazy. Obviously, for whatever reason, I think the market might have been expecting possibly dollar strong. So the market might have been expecting a little bit more inflation than we saw, basically like maybe a hotter CPI print, because the stock market just keeps going up, more or less, right? I mean, you definitely have some pullbacks, certainly, but the stock market does seem to just overall keep being pushed up, and we talk about it on X all the time. Xbound the Profound has his theory about crushing the VIX, and it seems to be pretty solid, because he maps it out every single day, multiple times a day. So with stocks heading up, usually that is an indication that we're going to see a little bit higher of a PCE and or a CPI. So it was reasonable for the market to expect more inflation on that quarter PCE. And if that print had come out hot, then we would have expected assets to actually fall, because no cuts coming soon. So the print came out lukewarm. It came out basically where inflation was as expected, so money came back into the market and appears to be actually pushing assets up. So yeah, gold went from 23.40 to 23.48. I mean, I wouldn't call this going crazy at all. I'll show you what's going crazy on gold. You want to see gold actually going crazy? You can go back to, say, like maybe the 11th, where it went from 23.25 all the way up $100. That's kind of crazy, That's kind of crazy. But this little move this morning, let's not be dramatic. This is not going crazy at all. But that's fine. It is going up. It definitely is, taking a bounce, right? And it has been on a climb up here. Gold is just generally bullish altogether. So gold traders definitely biased to the upside. That's how I'm trading. Can't tell you what to do, though. We don't give investment advice. Silver profits, we talked about that. I know Cool Cat's been on top of the silver for quite some time, and that's silver actually went up before we thought it would. View the Grill is pretty darn good when it comes to like predicting what might happen with metals, and on the macro, he's almost always correct. And in this particular time, he was correct. He just was like late, right? So it came up earlier than we thought it would. So silver's really been bombing up. We'll take a quick look at that before we flip over to the private show. Give me just one moment. XAGUSD. Okay. So you took profit back like maybe like last week, 2 weeks ago. That looks like about 12 days ago, 10, 12 days ago on gold. Trading day, or not trading days, but calendar days. So gold spiked up there. And it does appear that what I have predicted is more or less happening. It didn't bounce as low as I thought it would, but it is definitely with an upward bias. So again, this was a prediction that I made with silver a number of days ago, going back to 3 days ago. So more or less correct. Not, I was just giving a general idea of what I thought would happen. I figured silver would range a little bit and then go up. That it did, but it ranged for a much shorter time than I thought it would. Maybe for like a day instead of 3 days. So whatever that might be, that's just what's going on. So look, zap QR code, come on over to Algo Factory, right? What we do is we teach people how to trade. And when I talk about algorithms, I'm not talking about like, computer programming and, you have to know how to code and all that. That's not what we're doing over there, right? It's not this complex coding thing where you have to have high level understanding of computer code. No, not at all. What we do is we teach people how to build manual algorithms. So it's basically trading old school. And then if you want to program it to trade for you, we can put you on the path to that as well. That is part of the program, if you will. You'd have to find a coder to actually code it for you. But we teach you how to build these things so that they can be coded over. And then of course we have resources to help you with that process as well. So please zap QR code, come on over. And as Via the Gorilla would say,
join us or die.